levels?
Yeah, so uh I can show you kind of like the basic on how I start drawing out levels, and then we could talk a little bit more about like liquidity. And then the final thing I want to talk to you about is my imbalance level that I discovered. But we'll get to that at the very end. So you know the stuff we already know about uh, resistance and support. You know, like the obvious stuff, right? You already know like wherever there's like a equal high or like there's a top forming, that's where you'll usually draw a level, right?
Yeah.
and and that's true for the most part. But one sec, my lines aren't working for some reason. So that's why. So that's true for the most part, but what you have to also consider is there's if there's something like an equal high, there's going to be some liquidity sitting above and below it, right? So this is what I mean. Nvidia, for example, we've been in this little chop pattern, right? So the most obvious levels on the daily, you would say, okay, you have this, right? This is resistance, hit it a few times, broke through.
What is it, like
Yeah,
150?
yeah, like 150. That's the site number two, right? So
Yeah.
this would be like the most obvious level. But what traders end up doing, and me included, and this is where I failed, is I'll start taking the breakaway from here, right? I'll wait for this level to 150 to pass, and then I'll get in on a trade. Like, okay, this is gonna go. But oftentimes, what happens is see these highs right here where it's wicked. Now there's
Hmm.
some liquidity resting here, which basically liquidity means um, liquidity just basically means where there's some stops, there's some sell orders, there's some buy orders, there's a mix of things where price has created an imbalance. So days prior to that, price is leading up to this imbalance because it wants to take out some of the money here. It wants to grab this money and either make a move down or make a move up. The only way we can determine if it's going to make the move up is if we get this retest right here, right? The way to get that retest is you need a large candle. Wow, this is a horrible drawing. You need a large candle, right? And you need some displacement. Displacement basically means this. So, so this is displacement, where you have the body close above, and now you're going to essentially wait for the slow retest back down to the level, and this is where you'll enter. Okay, so that would confirm the move up, but most of the time you won't get that move initially. You'll get it later, but after the liquidity has been swept. So you have all this imaginary liquidity here, right? You can't see it, but you know it's there because this is where the candles have wicked. So what does price do on this day, on Thursday the 21st? It comes up, takes out all that liquidity, and then makes this big move back down. And where is it targeting? It's targeting internal liquidity. So let me go back. Where what do you know about liquidity, Shaz? Maybe that's where we should start. Do you where
Liquidity. Are those just market orders sitting there?
Yeah,
Or
basically you could think of it like buy and sell stops, right? So buy and sell stops are there, and what price is trying to do is take out those buy and sell stops to make the direction the opposite way. Yeah, I have a way that we could for real time. I think this will be easier to explain. So right now, this is our current range. This is our current range. This is the week of September 16th. Okay? So you have this high and you have this low, right?
and then we
This
have
is,
wicks around 170.
yeah. So yeah, if you want to get really accurate, I like to draw it right where the body meets the wick. So this is the highest wick, right? And this is where the body is. Never mind these wicks. This is the one that I'm really concerned with because this tells me in pre-market what happened was price reached this level of 180, but it aggressively shot back down. So it tells me that a lot of buyers are trapped here, right? Buyers got in, and now they're trapped. There's also sell stops up here, right? Stop orders for bearish players. So you have a lot of pent up liquidity here. So price eventually wants to come back to this level, but before it does that, it wants to take out this. It wants to take out this internal liquidity level first. So in any price period, you have internal liquidity, which are these two levels, and then you have external liquidity, which is one up here, and then one right here. And the way I know that, oh wait, sorry, not there, right here. The way I know that is you could think of internal liquidity as levels inside the trading week's range, and the levels outside of that week's range are external, the higher level. Price just wants to move to those next levels. Whether it breaks above that level or below that level is up to that week's price action. But all you know is that price wants to get there. Our job as traders is to interpret, is the price going to go through it or is it going to reject it and come back down? So based off of this, right, you have all this liquidity up here. Price is eventually going to either A, come up here, reject, take out some of this liquidity, come back to this level, and then make the move up, or is going to come up here, pretend like it's going to reject, get that retest, and then come to this level. Either way, this level is going to eventually get hit. Why? Because that's where the stops are. Either it's coming to this level or it's coming down to this level. Price always wants to gravitate towards a liquidity level. And so that's
So if we went long 178.50, for example, and let's say market's uptrend is up, our target should be the 180s.
If it broke out here, had the displacement, and you got the retest, if you're in at 178, your target is this external high, 184. Why? Because you have 1, 2, 3, 4, 5, 10 plus touches here, and price could not get above. And every time it got there, it aggressively wicked down. Whenever you see an aggressive wick, automatically think there's liquidity there. There's unfilled buyers or sellers. So price wants to come back to that level to take out those buyers and sellers and then make the move. But the trick is,
should we see those on the tape? Like, let's say the price is approaching 184.50, and would we see that liquidity like in the level two, like big sell orders? Or
you'll probably see it as a sell order, but then it's up to you to determine, is this a spoof? Because yeah, you'll see a 900 share seller, 900 lot seller, but what is price doing? Is it going with the direction of that 900 point seller, bid seller? Is it flushing down, or did it disappear? You know, because you see that a lot on level two. Also, I'm sure you've seen it where you're like, oh, there's a big buyer, but the price did nothing. Why did it not do anything? Because it was already in an area where liquidity has been swept and the actual move is down. So it's all based off market context, where the price is sitting. And the best way I've learned to determine the trend, screw these trend lines, screw all of this stuff. The best way is to just count the higher lows for a bullish move. So for example, this is on the 4 hour. I prefer 2 hour. It's just that's just my preference. Okay, so look, you have a higher high, higher low, higher high, higher low, equal high, but a higher low. So all you're really worrying about are these lows, 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 lows. They're getting higher and higher. So the top, the high will actually mislead you. For example, right here, this is very misleading, where you have a higher high, higher low. You have a higher high again, but then you have a lower low. It failed this trend line. It failed to meet this continuation of a higher low, higher low. It broke that. It was supposed to make a higher low here, but it didn't. Now it made a lower low, and then it made a lower high, but it still made a higher high, higher low here. So it's telling me that it's still bullish because this low did not come over here. Had it come over here, I would have flipped bearish. But this still tells me that it's in a bullish trend pattern. You know what I mean? There's something else I wanted to show you. Oh, okay, yeah. So this is the other example of the external liquidity I was talking about. So you have external liquidity here and here. So this is the range. I don't feel comfortable. This is what I was telling you the other day. I don't feel comfortable taking any position unless we're out of this range. Unless you do a scalp, this would be like a internal liquidity scalp to the external liquidity zone. So the green are internal liquidity, the white are external liquidity. Just think external liquidity is the target. So whatever happens in here, price wants to go to the target. So right now, we're right smack dab in the middle of no man's land. We don't know where price wants to go because there's just not enough information. So for that reason, I'm hesitant to take longs or downside plays because I don't know if the market structure is higher highs, higher lows, higher highs, higher lows, or lower high, lower lows. You get what I mean? Like we need more information to figure out which area it wants to target. Until then, NVIDIA is kind of off the table for me. And unless you do scalps. So if you're good at scalps, like you are, Janet's good at scalps, you guys could take those 2-to-1 trades, like the 50-cent dollar moves. But I suck at that. So I like to trade when it's closer to this level. If price was getting around here, yeah, sure. I'd like to get into a long here with this retest with the target here. But until it does that, I don't know what it's going to do. All I know is where it wants to go. But which direction, that's remains to be unsaid. Seen.
Latest SMB video I watched, they drew their levels out like this, where they said, imagine where the price is going to go. So on the chart, they drew lines like you just did, where they imagined where the stop would be, the target would be, how the kind of trade would kind of go out.
Yeah.
So even the prop firms look at it like this.
Yeah. It's our job as a trader to see where the target is, but not be fooled by the bias, because the bias can change. It can make you think that it's going to go up, but all it does is do a liquidity sweep and it sweeps back down. And now you're like, wait, I was bullish, but now everything is telling me it's bearish. So basically it's just how I approach it is I look at the daily, and the most obvious levels are my support and resistance, right? Like I drew some here on Tesla already, but wherever there is a support and there's also a resistance is the most truest, the most powerful level. Everything else is fake. So for example, right here, just look in November, Tesla has resistance here, but then here in February, it met support. This is a good level. Now I'm going to look for this almost like a permanent level, because when price comes back down, it's likely going to hit support. Because why? Because this was resistance and now it's support. You'll have other levels where you don't really get that, like something like over here, you have some resistance. I mean, you have some support here too. So this could also be another level, right? But eventually, where Tesla wants to go is here. Why? Because there's some liquidity resting above, hence the wick. So now the question is, if Tesla hold this support and move up, or fail this support, come back down, use it as resistance, and comes back down to this zone. That's going to be the question. So, yeah, that's pretty much how I draw my levels, but I don't think it's too far off from yours, right?
Yeah, I'm still trying to grasp I get what the liquidity thing is, but like for example, if you go back to NVIDIA, you have a 2-hour chart on it. Yeah, let's say like we trade this every day, and even the internal versus external, they're kind of wide ranges, right?
Yeah.
So I don't even think the ATR of this stock is gonna go within those ranges, right? It's just more of a macro view for you, or
No.
for you to
So
trade it, you want it to be in those levels.
I want it to be closer. So this range, this is the worst. You don't want Nvidia. You don't want a stock to be in a range like this because then you can't get the next move. But if it's something like this, if it's here, let's say Nvidia was trading here on this day. Now I have a move here. I know Nvidia wants to target here. This is an external high, external liquidity. So I would wait to get in on some support here to target this area. Because why? Because it's in an uptrend. There's no levels here to the left.
Mm-hmm.
It becomes a problem when it's in this range. That's why for me this is not tradable, because exactly what you said, the ATR is likely not gonna make this move in
That's
one
a
day.
good point, right? Because on
Yeah.
the previous example, left it's just clear. Now it's
Yeah.
just it's so messy.
Exactly. It's harder to trade this because for me this is not high probability unless I'm scalping. But now I'm starting to realize, being 4 years into this, it's not worth it for me to expose myself every day on a move that may not go in my favor. Why? Because there's already chop. It might go in my favor for a 1-to-1, but knowing me, I'm trying to hold for that 2, 3, 4R, and it's not going to give it to me. I'm just going to end up giving back my gains. So I haven't been trading Nvidia because of that.
So look at this. So it's testing your internal level, right? 178.
Mhm.
Let's say 50, for example. So would you go short around 178.50?
I'd have to see
Give it
some
like
strong resist, some strong rejection with a lot of volume, because for me this is exactly in the middle.
it's
External,
exactly in the middle.
it's right in the middle. So man, you need like another few days of data to see, okay, is it going up? Is it going down? This is like almost like, for me now, this is almost like gambling in this scenario because we have no idea which way it's going to go, right?
That's a good point. Yeah.
So for that reason, Nvidia is not an A+ stock for me right now, man. It's I'm just not trading it.
Can you pull up the daily on Nvidia?
There. Dude, look at this. Look how weird this is, man. Gap fill. Okay. Did it fill the gap? Yeah, kind of. It shot through the gap and then it filled it later. But it's weird.
It's just a nasty range right now.
Yeah, it doesn't make sense. Okay. It's like, okay, you tried to break the range here, but what'd you end up doing? You ended up just sweeping this external liquidity right here. You swept it, and now you're back in the range. Okay. What do you want to do, Nvidia? You want to, if you swept it, now are we making it up to here and then breaking out, or we're sweeping it and coming back out of it? Until
I
then,
guess we want to see if we want to break 180, huh?
it would really be, yeah. So it would really be this internal level. If price can break above this level, yeah, now we have a pretty good shot at getting to 184, 185. And if it gets there, oh, great, man. Now 200s are in the next psychological level, right?
I mean, that would be like all-time highs, huh?
Mhm.
That's blue sky.
Blue sky scenario. Yep.
Yeah.
All
right.
AMD
Yeah,
actually,
that makes sense. Yeah.
AMD actually looks better than that. AMD is looking more bearish to me than anything. But let me show you this discovery on Tesla, man. I've been excited to show you guys. But now that you have it recorded, we'll share it with the guys. So
Okay, let me pull it up.
So check this out, man. So I'm gonna hide my drawings so I can pull them up later. So this is the 5-minute on Tesla, right? This really doesn't have anything to do with liquidity, but I've been testing how to find good bounce levels, and where there would be like a sniper entry for a move to the upside. I haven't tested it on shorts. This is just strictly for bounce for long. Okay, so notice, actually, I'm gonna have to delete all this. So notice, I want you to pay attention to the 1555 candle of the close. Basically, it's the 5-minute candle right before the close. You'll notice that every session, end of day, the 1555 candle has a huge spike in volume. And that's the case with every closing day. Look, 1555, huge spike in volume. 1555, not as big of a spike, but still a spike in volume. 1555. So you get it. Every 1555, something is happening in terms of volume. And that's basically that's when the imbalances come out for the day, right? So I was just messing around, and I actually scoured the internet for this to see if anyone else is trading this to confirm what I've discovered, but I can't find anything on it. And I think it's because the most obvious thing is this level is the close, is basically the previous day close. But I've been drawing a demand box off of it, and it's been holding pretty true, man. So let me show you this. So usually what I'm finding is the demand box holds true for about 2 to 3 days out, and it'll lead into the future price action as a level to find either a bounce or rejection off of. So actually, let me show you. 1555. Got a bounce right there. So see, let me go further back. Right here. This is where it starts to get good. So 1555, this candle. Look at this bounce. Next day, this was a next day bounce right off of 1555. So that's the zone. Price comes in. All we need is a close above the zone, and we get in long. Why? Because this is the most immediate supply zone, not based on external or internal levels. This is just the most recent demand zone that developed from either yesterday's 1555 close or the previous day's 1555 close.
So what does that say? Is there liquidity there?
No, I wouldn't say liquidity, because usually liquidity happens off like some type of rejection. Like this, you could kind of consider liquidity, but if this happened on like the hourly or 2 hourly, that would be considered more of liquidity. But on a 5-minute time frame, likely not. Likely not. So
Okay.
I'm still testing out to see what exactly it is. But so this was Thursday on the 11th, right? Check this out. Tuesday on the 9th, we have this small tight consolidating range of 1555. Look at that. Right there again. And this is happening in a range market. It's not even happening when it's in a full-on trend. This was in a range. And it's doing it on repeat, man, over and over. Some days it won't do it off the bounce from the previous day, but it will do it from a couple of days back. So then you just go further back, 1555. And sometimes it's not always as clean, but you have to kind of just determine how price is reacting at that level. So see, like this day, it didn't really do it clean. You got the break above eventually, but it wasn't clean. There we go. Here's another one. $15.55, small consolidating candle. Look at that. Beautiful. And initially, when the market opens, the damn market is opening here, right? And you're thinking, oh man, Tesla's gonna freaking sell off. This huge rejection candle. You're like, oh man, this is Tesla's looking bearish. But then what happens? You get this nice wick right off of the 1555 close, and the thing just shoots up. Right? So I'm seeing this more and more repeat, because I've just been trying to fine tune how these people are finding these levels for bounces on Tesla. And my eye was just drawn to this. In this case, this is a good short scenario. 15.55.
Yeah.
Price open below pre-market. And that's another thing that I'm trying to add to it. I'm trying to see where price is opening pre-market. So far,
If it's under
price,
it, yeah.
Yes, exactly. So if it's under it, you could look for it as a potential reject level. But this one was a little more tricky because you would have gotten in here like, oh, okay, this is a nice reject. I would have gotten in right after this candle closed, and then I would have been stopped out. But then the move happened anyway, right?
Yeah,
so
yeah.
very, very interesting. And it only happens off that 15.55 level. So play around with it when you have some free time, and I'll be sure to mention it too on the next trading days. But very, very interesting scenario. And
Yeah. Let me close the recording. Yeah, this is definitely interesting.
yeah,
Let's see if we can backtest it or something. I mean, I guess you're already there, but
so look, here's
some more
another
data.
one, but not as clean. But here's another one. So price came below. Once it closes above, held the level very nicely, and then shot up. What I haven't done is tested it with like EMAs and indicators. I don't have VWAP on here, but very promising, man. Very, very promising level, and it holds true. You just have to anticipate or observe what the price is doing off that level, right? So
Okay.
yeah,
So let me draw some liquidity kind of charts